Hi, everyone. Thanks for joining us. We're going to get right to the main question of the panel. So I'm going to start off with a hard question. Has embedded finance failed? You want to start, Jana? Who wants to take this?
Very, very good morning. Wow, you're really starting with the hard question straight away. I would say, no, it hasn't failed, but embedded finance is in a difficult position. I think what we've seen in the last few years, if you allow me to just take one step back, is we've seen many of the right steps being put in place, both from a regulatory perspective as well as from a technological and standardization perspective. So the right steps were there. If you think about embedded finance as a big puzzle and the different pieces have been put together. We've had the opening up when it comes to the Second Payment Services Directive, when it comes to open banking, when it comes to the various standards, all being put in place to essentially allow the connectivity between the different players in the marketplace. Have we actually seen the delivery of extra value to the end customer who is supposed to get the real benefit? No, I don't think that we have just yet. So if I had to give you a short answer, the answer is it hasn't failed, but it's not like we have succeeded greatly either just yet.
Yeah, I have to agree with that statement. I don't think that it's failed, and the forms of embedded finance has been around for many years. So we're talking embedded finance and banking. We're talking about insurance. We're talking about lending, and if you talk about lending specifically, lending has been there, buy now, pay later as a concept, for many years. So I don't think that embedded finance also has a chance to fail because it has been integrated, and is slowly being more and more adopted and integrated into infrastructure where financial services are needed. However, as Jana rightfully said, has it been done completely successfully? Has it been done without hiccups or any issues? That's a different topic. But I think for a fact that it's too early to say that, okay, embedded finance is a flop, but maybe it's too early in the panel to break it, but that's my personal opinion.
So what was the great promise behind it? Because that might help set the stage. I went right for the question about whether it's failed or not, but why was everybody talking about embedded finance? What was the hope for it?
Yeah, I think it's the simplicity and the idea of the financial services being available in a non-financial environment, right? So if you talk about payments in general, it's always about the access and the speed of it, right? So everyone is sort of focusing on the fact that the deliverable for the end user is very quick. So the appeal of it is great. And as a business, if your core service might not be payment related or financially related, in most cases you rely heavily on certain parts of the financial infrastructure. So if you don't embed it fully into your non-financial platform, it's difficult, also becomes difficult to service the client. So that's kind of, this is my thoughts on it.
I mean, going back to your question, what was the promise? I think the promise was really liberalization of payments. The big promise was anyone can access any payment anywhere in the world, and it's going to be instant, and it's going to be free. I think that was really the promise behind it. And everyone was talking about embedded payments because everyone realized that this is an opportunity to get much closer to your end customer. And the end customer could be a business, it could be a retail consumer, it doesn't matter. Now, the challenge with that promise of opening it up to everyone anywhere in the world is both technological, as we all know, because we are still relying on legacy infrastructure from a banking and payments perspective. But there is also the issue of regulation, or if I had to put it simply in layman's terms, there is the issue of trust. Because if you open it up to everyone, it means everyone can deliver an embedded lending product or access to banking or access to payments. Now, the issue with that is that we're talking about something that's very intimate, because it is ultimately a conversation about money. And when it comes to money, this is something that people feel very strongly about. And for it to work, there has to be a fundamental level of trust. Now, how is trust created within our trade? The trust in our trade is created by having put the right technologies and controls and systems in place, but also by making it very clear who is ultimately responsible for delivering that regulated product or service. Because embedded finance is all about seamless integration. It's all about blurring the lines, right? It's all about not necessarily realizing whether you're getting a loan from, I don't know, your favorite football club or actually the branch of your high street bank. But then the question is, if something goes wrong, who am I going to go and raise my concern with? And that's where I mean that we have made that big promise of we're going to liberalize the payments market or the banking market or the lending market, but we are ultimately talking about a very highly regulated set of products and services. Right. And there is an issue of trust there, in my view.
And I think it's a very valid point because there is sort of the blurred lines between who is responsible, and I think for the consumer, it's kind of a dangerous also place to be, right? So in a case where the environment is so highly regulated, we need to make sure that all aspects of that transactions are completely secure, whether it being from the technological side, how the client is onboarded, how we monitor, whether the party in between that, takes over a certain responsibility of the due diligence or KYC is also doing their job, because ultimately the job of the payment service provider at the end of the day is not to fail on the consumer and on the end client. And I think there's still a long way to go to make sure that chain doesn't break in between. And I always really feel very strongly about the position of, of a financial institution, because we're as a regulated party, we need to make sure that at no capacity the end user is actually in a disadvantage, right?
How do you strike a balance between making the consumer safe so that they know who's actually offering the service versus making it seamless? Because part of the embedded finance promise is that you don't really realize that where it's coming from.
Yeah, I think that's a really, really good question. Striking that balance is ultimately going to the point of collaboration and the point of creating a broad ecosystem within which the various players are able to integrate from a technological standpoint to deliver the best user experience possible on the one hand, but equally there is sufficient level of clarity when it comes to presenting to the customer what their rights are, what their responsibilities are, and what is ultimately the recourse if anything goes wrong. I think the only way forward for the development of embedded finance is to really increase that collaboration, increase the collaboration between the various regulated providers, the various providers of infrastructure. And again, when I speak about infrastructure, I'm specifically referring to that combination of technology as well as the licensing hat or the licensing framework, with anyone out there, any industry out there, as we see many here on the floor, that are looking to build a regulated product. So it's only by doing this and deepening that integration between the regulated and non-regulated sectors that we can deliver a smooth customer experience, but equally have the right checks and balances in place to ensure that the customer is safe.
I would say also that transparency is key in general, and transparency can be achieved by several ways, right? So transparency from the regulatory perspective, so meaning that the clients, the end user should really know who is behind a certain service, right? So, and also educating the end clients to understand, what kind of services, requires what kind of level of security, or who can provide, these services, I think is paramount. So if you do not educate also the end consumer, then you ultimately create a discontent of the service itself, because if the user doesn't understand, that the service ultimately cannot be provided, by the platform that doesn't have a financial license, then their discontent for the whole product can be also very, very high. But from the regulatory perspective, and there's a lot of work going into it to make sure that whoever is providing the service to platforms that are not are regulated, that we clearly passport and we make sure that anything that is basically burden on us, that we make sure that this is followed through and it doesn't have a negative impact on the end consumer.
And if I may just pick up on that last point, I think the point of transparency is really, really critical, not just insofar as the end recipient of that service is concerned, but also the other stakeholders within that ecosystem, regulators being one of them. I think what we've seen in the last, well, frankly, few years, not just the last years, we've seen a number of examples where even regulated service providers have frankly failed to meet the expectation and the standard that's being set. And I think it's very important that the industry, as well as the regulated service providers, work hand in hand to build that trust with the regulators, whether it's through working together in sandbox environments, whether it's through showcasing different use cases, demonstrating actually what is the split of those core responsibilities, how is that being brought to the user, how are the user rights being safeguarded, and build that confidence from a regulator standpoint. Because I feel that we often, in a closed circle, as we are here within the industry, speak an awful lot about embedded finance and the future of embedded finance, but we often fail to bring all of the market participants on the journey with us, whether that is the, I guess, regulators, or whether that are those are the, I guess, core managers, moderators of the legacy payment schemes and banking infrastructure. So I think having that transparency for all of the participants of the marketplace is going to be really critical for the future development of embedded finance.
And also, if you look, how fast, the industry is growing, the reason why you need all of the sort of stakeholders, to come into play and, take care of the whole infrastructure, because the growth is very fast. We're talking about a digital growth. We're talking about, payments being done, the way that it hasn't been done before. And the companies itself, who do not inherently have the ability to have the financial service, they're driving this innovation and this advance also. So if you are not sort of, following through, and if you're not having, regulators and all of the parties, in between, making sure that that's done in a safe way, then that's where ultimately it could fail, in my view.
Where does the value lie? Is it in the relationship with the customer? Is it like the entity or the business that's maintaining the relationship? Or is it, I know I'm asking a skewed group here, or the back end? Like, where have we figured, like, are there discussions there too? Like, actually, we're taking all the blame, so we should be charging you more. Like, is that also something that's still in flux and slowing things down?
I think about it in a different way. I put myself in the shoes of merchants, of companies who are doing a certain service, and as I mentioned before, where the financial aspect kind of becomes part of the platform. So they need to do it in order to not only have a better value for the end user, but also to have better value also as an organization, right? Because you have too big of a reliance of products, that fail to deliver a certain user experience, for example, right? So then ultimately the goal of the company and the merchant or whoever is, that is providing that service, they're failing on their clients. So I'm kind of looking at it from their perspective, that they need to do it, because otherwise the value for the other service, the core service, is kind of lost, in between. And the simplicity, because we talked about that before, there's speed in this, in this, right? So when you want to deliver something, when you want to get, that value, speed is crucial. So in most cases, the companies are driving towards implementing, these solutions, because they give them that speed, and that gives them value, and that gives value to the end user as well.
If I may be a little bit controversial, if you allow me to, I don't think that we have quite identified where the value lies just yet. And the reason why I'm saying this is because I think the journey of embedded finance started with the regulatory changes first. Then we had the standardization from a tech perspective. And as, I guess, those fundamental pieces were just being put in place, we found ourselves in the age of very cheap money. So when people started thinking about embedded finance, this was more of a marketing trick, a buzz term, a nice to have, and people were building things around it just because they could afford to tap into very cheap capital without the fundamentals of a business model being there. And I think, if I have to go back to your first question, this is also one of the reasons why embedded finance has not fully taken off. We see great examples within the open banking community, for example. We have a number of open banking players that are really, really struggling, especially on the payment initiation side of things, to actually come to a value add or generate value add that would be picked up by the industry, an industry that's ready to pay for it. So I think if I go back to the point around collaboration, we really need to deepen the collaboration between the different market players in order to increase the incremental value that we can deliver to the merchants that Ugne was talking about, and generate that value, because we're not quite there yet. We're definitely not there yet.
I mean, I will have to disagree with it because, there are quite a few examples in the market, and I will talk about one, which is Shopify Capital. So Shopify Capital basically provides the merchants on the platform the ability to access lending. So we're talking about really small merchants who, in most cases, would not have access to financial products, or the process for them of obtaining a loan for their business would not be possible. But by analyzing the transactional data, Shopify can predict, according to their sales, according to what they perform as a seller, they can give them a loan embedded in the platform. And we're talking about the fact that, I mean, it's good for the overall ecosystem, it's good for the participants, and I think it really creates value. It creates value actually for the seller to operate, and also creates value for the platform itself, because it grows its sales, it can grow also, the sellers. So ultimately, yes, I think it's not black and white. Maybe not all of the value, I agree, has been created, fairly so, because, some companies went and said, okay, let's issue a card and let's make, money on interchange because it's just another, revenue stream. Okay, yeah, the value for the end consumer in this case, okay, it's just another, marketing ploy, to get them to spend, and whatever else. But there's really inherently a lot of, great examples of embedded finance, that work very well for all of the participants of that, value chain.
Yeah, no, I think that's actually a great example. And to be able to answer the question, have we actually identified where the value lies? I think ultimately it goes down to the point, would the merchant that is utilizing that platform be ready to carry a cost that is higher of that loan Correct. In comparison to any other channels that they can use to access that capital, because of the speed, because of the ease, because of the better UX, because of that full integration and that seamless delivery of the service.
And also in some cases they cannot get it. So that's the point, because it's not accessible, to them. So we're talking about that, you're actually empowering also, the merchants on this case, to grow, to have a sustainable, living. So there's really good examples, of it. And also, okay, if you look at Uber is another great example, Uber Wallet. Uber Wallet is a platform for drivers and consumers who basically have a wallet where they can store value, they can make payments easier. Yes, it's not maybe such a genuinely viable added value as, let's say, in Shopify's case, but again, it's the added value for both participants and for the ecosystem itself, for the driver itself to have instant access of their funds. There's someone that is earning on that, so they don't have to wait for weekly transfers of their money. They can have access of their money, because what are we talking about? We're talking about the fact that that the merchant can provide, in this case, instant access to the funds to the other party. And in a world, in an e-commerce world, where we're going towards, in general, marketplace, sort of thinking a marketplace environment, where you have buyers, where you have sellers, that's crucial. So embedded finance can provide that instant access to the funds. And it's very, very, very important added value from my perspective.
Are there areas of finance that are better at being embedded? You mentioned payments and lending. Have we figured out that some areas can be embedded in a more effective way and some just cannot?
Lending?
Yeah, I think we just spoke about
for lending here.
Yeah, because we just spoke about it backstage. I think buy now, pay later has been in the focus for quite some time, and I think for all of the right reasons. Because coming back to the previous conversation, if you don't really focus on safeguarding the consumers and how they transact, you're running into problems that that are kind of beyond of the control of the company. So buy now, pay later, unfortunately, had that risks and also unregulated risks in a way that it doesn't provide normal credit risk assessment for the end user who's actually purchasing or buying something, right? So it creates quite severe consequences, which I think need to be repaired. And as you see from the regulator side, it is a lot of focus towards that and into regulating properly and making sure that that again that the consumer is not let down in this instance. I don't know. I think Jana is going to.
Yeah, no, I would agree with that. And if I had to place a second one, I'd definitely go for payments, embedded banking solutions. I think payments banking have been a pain point for a really long time. We are definitely seeing a move away from traditional card schemes and cards as a payment method. We are seeing the challenges around the cost, around the speed, around the, overhead when it comes to reconciliation, et cetera, So there is definitely a move away from the card rails into how can we actually embed the access to traditional payment schemes to move value across border through different jurisdictions. So to me, that is one area. I think we are going to see more and more development, especially now with, the upcoming changes to the Payment Services Directive, the third Payment Services Directive, opening up the opportunity also for PSPs and EMIs to also offer credit that's adjacent to the payment transaction cycle. I think that's becoming very, very interesting and opening the gates to more and more embedded finance solutions.
So I have one more question, but you have 47 seconds.
Go for it.
Who will be the ultimate beneficiary of this? Is it going to end up being the usual suspects, like the big banks, or is it going to be the consumers that actually benefit from embedded finance?
Oh, that's a really tough question,
especially
for the 30
current
seconds.
Interest rate environment.
Yeah.
Very,
Yes.
very difficult question. I think ultimately the consumer will benefit because we'll see more and more partnerships, collaborations, delivering a better, cheaper service to customers.
So everyone else will be competing for the pie, but ultimately I think the end consumer will benefit from it.
All right. Thank you so much.
Thank you for having us. So we go there? Or?
I don't know.
I think we go